Hello guys, it's Max here from Daily Market Movements, and today it is Friday, which marks the end of the trading week. We have seen some volatility, markets trading mostly up at all-time highs, but the likes of gold, we've seen an extreme amount of volatility, which I'm going to get into next. But just before I start today's video, guys, I would just like to say thank you for watching. Please subscribe to the channel if you haven't done so already. For those who are wanting to receive trading signals from myself and the rest of the team here at Daily Market Movements, and please feel free to visit our website www.dailymarketmovements.com. I've left the link at the bottom of this video's description that will send you to this website where you can then subscribe to our service for a very small fee of £249 for a year's membership. But let's go and have a look at some charts. Let's start off with the gold markets. Now, the gold markets, we've seen a lot of volatility this week, and I have to say, I've got this market bang on right. I've been warning all of you for the past 2 to 3 weeks that I'm extremely bearish on gold. On Monday and on Wednesday, I called for the gold markets to fall. That's why I put this green box down at the 1680 area. The good news is that if you haven't yet opened a sell position, it's still not too late. As you can see, we're still trading up at 1750, and we still have a good 50 to 70 points further to fall until we achieve my target down at 1680. I think eventually we break below this 1680 area. Look, if I just draw a supportive line, as you can see on 4 separate occasions here, it has offered plenty of support. I'm just going to say that on our chart. There we go. If I just highlight those 4 occasions where it has offered us support, if I just do that, I'll make the color green for you. There you go. That's the first one. This is the second. We had another bounce from this 1680 area. If I just spread that, there we go. That's the third occurrence, and then last but not least, the fourth time was just about a month ago, which was the midsummer. I think it was mid-June, end of June, where we bounced from the 1680 area and it sparked the rally all the way up to 1830. Now, 1830, we've struggled to break above. We've been rejected there on 3 occasions, as you can see, 1, 2, 3, and now that's basically meant that we've now gotten broken below the 200 and the 50-day EMA. So I am bearish here for the gold markets. Of course, we have that bearish crossover where the 50-day EMA is pierced below the 200-day EMA. So 1680 is where I'm targeting, and I think medium to long term we break below 1680, and I think this is our next target here for the gold markets. Going into the Nasdaq100, if I'm just going to load that chart, I am bullish on the Nasdaq100. Here we go. Here it is. And again, I've got this market very correct this week. We had that sell-off for the first 2 weeks of September, which, I did warn about as we went into the month, that September, historically speaking, is the worst month of the year with regards to the stock market performance. And that's very evident here that we sold off rather hard for the first 2 weeks. I did think that we were going to go and target that 50-day EMA. We didn't quite get that low this week, which is it is a shame, because that would have offered more value, and I'm pretty certain that we would have bounced off the 50-day EMA. But nevertheless, I advised myself and the signal team to buy this dip, and we did, and we're now trading in profit, and this trade is about to hit take profit. I would take profit up at 15,600. So I'm very confident that trade will go and hit its take profit. Going into the next chart, which is the S&P 500. Let's bring up the S&P 500. Very similar, but the only difference here with the S&P 500 is that we did, in fact, nearly hit that 50-day EMA. Again, I was a buyer here. I advised my signal team to buy the dip. We did. We're currently trading in a profit, and I do anticipate for the S&P 500 going into next week to go and target those all-time highs. But don't forget, we've still got 2 weeks left of September. Historically speaking, September is not a very good month of the year for the stock market. Now, going into crude oil. Crude oil has had a fantastic week this week. We've broken out that 50-day EMA, which was offering plenty of resistance in the market. We've struggled to break above that 50-day EMA, but this week, as I just mentioned, we've managed to do so. We did trade as high as $73 a barrel. We pulled back roughly $1.20 since then, but I'm very confident going into next week we go towards $75. So I see this minor dip as a buying opportunity up towards $75 a barrel. Now I'm going to bring up the Euro US dollar markets. Last but not least, we've broken down, surprisingly. The dollar's been gaining some strength. I think this is very short-lived. Why? Well, as you can see, the Euro US dollar has a fantastic amount of support, not just here, but also here around this 1.17 area. So I think that we go as low as 1.17. I think ultimately we bounce, we go and target the 50-day EMA, we break above the 50-day EMA, we then go and target the 200-day EMA, and once we break above that 200-day EMA, we got towards that 1.22 area. So I am bullish here for the Euro US dollar. I prefer the euro over the dollar for the medium to longer term. That's it for today's video, guys. Monday, I'm going to be analyzing the markets as we go into a new week trading. Thank you very much for tuning in for today's video, and if you haven't yet done so and you're wanting to receive our trading signals, then please do not hesitate to visit our website at www.dailymarketmovements.com.